Today the market has basically just fallen off a cliff. It's all down to Jerome Powell and what was said and what wasn't said in his latest interview. But this is all very exciting because there's loads of buying opportunities out there. Welcome back to the channel, guys. If you're new to the channel, please consider subscribing down there so you don't miss any of the future content I've got coming out. And while you're down there, give it a little like as well, or of course wait until you've enjoyed the entirety of the video and then give it a little like because you've liked the video. Pop a comment down below throughout the video as well on your thoughts on the subject. Let us know what you're buying into, if indeed you are going to be buying at the dip, because that's all about what this video is going to be about. But yes, essentially the market dipped today and it's because of the Federal Reserve. Jerome Powell spoke today and it was expected. Now, I don't know the ins and outs of this in full detail. I know the basics of it only because I've just been looking at it now. The market dipped last week because of bond raise. Now, there were strong rumours that the Fed were going to announce an extension to a certain deadline, regulating banks to hold on to a certain amount of cash reserve. By law, banks have to hold on to a certain amount of cash reserve. That was eliminated in March last year so that they can go and spend money, basically, and do what they needed to do with it. That's up on the 31st of March. They were expected to come out and announce an extension to that so that banks could therefore go and spend lots of money, buy bonds, and that's the reason the market dipped last week, because of bond yields. They were expected that banks would then be able to go and carry on spending money on bonds and drive the bond yields down. That didn't happen. There was no announcement to that effect, and that's why the markets crashed. That you do not need to know. There was no, for your own interest maybe. The point is, and the point of this video is the market going to carry on crashing? That was the very reason it dipped. Is it crashing? Strong words. There's been a huge dip today. We're going to have a look at it because I think as of right now the market is actually still open. So we're going to have a look at it. We're going to have a look at what stocks are dipping, what could be potentially good buys. I'm going to show you what I bought today because I bought 1, 2, 3, 4 things today, I think. So we're going to have a look at exactly what I bought into today. 4? I think 4. And we're going to just take a look at the market, look at the deals that are out there, and have a chat while we're doing that about one's mentality, one's mindset, your mindset, an investor's mindset. Forget penny stocks for the moment. They're always volatile. Yeah, fine, you could buy up and then it could rocket even more, but let's forget those for 1 second. Too volatile. Let's look at blue chips, let's look at indexes or funds, and let's look at the cornerstone of the market, the pillars of the marketplace, let's call them. The stocks that are, and funds that make up and form the majority of the market. So we'll have a look at that right now. We'll go straight into the computer. We will get IG open. I'll show you what's happened to my portfolio and how far down it is as of right now as a percentage, where I was up to 7.5%, 8% up in total. So we'll have a look at that and I'll show you exactly what I've bought into as well. So here we are. I'm going to start on the home screen of IG so you can see exactly how far up or down my portfolio is. Completely lied to you outside. We're far higher up than the 7 or 8% than we were, but we're certainly not as high as we have been. So that was completely wrong information. But I don't really look at percentage up, to be honest. I just look at what is a good deal at the moment and get the money in, as I'm never taking it out. So I don't need to know the percentage up I am. Here's the account. It's this is my main account, so everyone's moaning about how the market's absolutely fallen off a cliff. I'm still at close to £54,000 and it would have been at around 55, 56 before, so not a huge dip. We're at 14.5% or so. So let's get into the portfolio and we'll look at some deals. We'll find some deals. First of all, let's have a look at the overall market, and we're going to do that by looking at VEO, which is Vanguard S&P 500. So we've had in the last couple of days quite a sell-off, and today was quite a big movement here. That's a good indication of just the market in general. So if we come out of this and just scroll way out, we can have a look at what happened last year. It started Feb the 20th, fell off a cliff. Are we going to see the same thing? I hope my face isn't in the way. Are we going to see the same thing again? We had a couple of other dips and it's carried on up, another small dips, carried on up, another dip, will it carry on up? Who cares? Who knows? Fact is, if you're a long-term investor and you're going to be getting into things like this S&P 500 index tracker, the VEO S&P 500 ETF, then it doesn't matter. You dollar cost average at any point you possibly can. Should you do it maybe a bit more so at moments like this? Yeah, of course. Why would you not? I mean, it's common sense, which, spoiler alert, I have. I can't remember what I got in at, but I'll have a look in a second, but we're already a bit up, which is good. So let's have a look at a couple more deals that we've got here. If you're a fan of Tesla, I was getting very interested in at around the $650 mark. It's dropped as low as sort of 600 today, and we're now running at 619. So I think Tesla could be a good buy at the moment, potentially if you think it's got the legs and it's still up to a $900 stock. You might be interested to see a video I did recently that was reporting on an article from Seeking Alpha about Tesla and how it's a bit of a bubble. The figures in there were quite compelling. I'll tag it up here. Go and have a look at that video first before you do anything else, before you buy into Tesla, just in case the figures and the facts in that article are far too compelling for you. But it's 618. A lot of people are looking at that as a pretty good deal at the moment. Let's look see what else we've got in here. So I actually sold out a couple of my stocks recently that weren't paying dividends or had run up enough. I'm going to take a look at one of my all-time favorites and just see where that is. So AT&T, I'm still massively down on that. And actually, if you have a look at that, that's not had a terrible day all in all, but it's been running at sort of $28 for quite a long time now. I still think that's a little bit undervalued, quite frankly. I feel it really should be at least at 30 or more. I bought up at 35, so I'm way down in AT&T. Doesn't bother me, it's not a problem. It's a massive payer dividend wise, and this is mostly a dividend portfolio, so it's not an issue for me at all. And of course, this dip hasn't affected all stocks. If we take a look at something like Facebook, we've been trading sideways in Facebook between 250 and 280, 290 ish for quite some time now, in fact a long time. And if we have a look at what Facebook's done today, that's actually not had a terrible day. All in all, we are up from the last couple of days that have dipped. So not every single stock is reacting in the same way, but this could be a good opportunity to buy some deals and bits and pieces. Iron Mountain, so the REITs actually look like they're not doing too badly. Let's look at this REIT. Yeah, I mean, it's run down a tiny bit. We're still up in there. Simon Property Group, very popular one. That's had a bit of a sell-off today, so again, could be an opportunity to get into some Simon Property Group at 110. Could it be back up to $120 in no time at all? Well, yeah, I don't see why not. Once things recover a bit further, it's been up to $150. So Simon Property Group, possibly a good buy at the moment as well. So have a look through this. Lots of deals to be had at the moment. I'm going to run you through now exactly what I have bought today. So let's go into history here. I'll open it all up. So actually, this is a history of what I've been doing over the last probably, well, nearly a month or so. So as you can see, I've been buying Apple, all in the dips, just one or two here and there. We sold out a bit of BioLine. This is a while ago, you don't need to know this, but we were at massive profits, or good profits. Sold out a little bit of BioLine, that's now pretty much breaking even, so that was a good sell at the time, as was Win, as was Walt Disney. Got rid of Walt Disney just because it stopped paying its dividends, and I'm trying to focus this more on dividend payers. Walt Disney doesn't move enough for it to be a growth stock, and it doesn't pay dividends. It just doesn't make sense in this portfolio. It makes sense for a lot of people, doesn't make sense for me in this portfolio. AS Capital did a video on that. We all know that I bought that. Now let's have a look. So in this slight dip, I had a bit of money free last week. I bought some Vanguard International High Dividend Yield ETF, and this is what I've bought today. Another Apple share at 121. So if we have a look at Apple at 121, it's currently running at 119.6. Too close to 121 for me to start buying again, and we'll see what happens with that. If it dips further, I've got £203 left to spend, so that could be another purchase. What else have we got? So we got Royalty Income. I bought Royalty Income at 60.64. Royalty Income here, and we're at 59.30. So tiny bit less where I bought it at. There was obviously still moving throughout today because the market is still open. Royalty Income's pretty much been trading sideways between a band of like 57-ish to 64, 65. So I bought one, no I didn't, I bought 2 shares of Royalty Income. PIMCO Corporate and Income Opportunity Fund. I've literally just done a video on these guys, or PIMCO as a whole, and so true to my word, I have bought more of that, and I bought in at 17.95. PIMCO was always doing quite well, 17.95, so we're still pretty much there, 17.93, and it's just been trading sideways sort of for the last few months. But PIMCO is always going to be a good buy for an income play in my eyes, and actually we're not all that far off recovering fully. We just needed that little bit more when we're back up to recovering fully. But I'll always buy dollar cost average, always buy funds like PIMCO, Corporate Income Opportunity Fund, not exactly this one, but like this. It's a closed-end fund, so it's actively managed, whereas the ETFs are not. They just track index funds. Let's have a quick look at what else I bought today. Last thing is the Vanguard VOO, which I alluded to earlier. I bought that at 343.5, and we're at 345 there or thereabouts. So actually we've gone back up since I bought those, which is great. And we're going to dollar cost average for years and years to come in things like VOO, in things like the PTY, the PIMCO fund, and bits and pieces like that. So we're not doing anything outrageous here. We're just buying good quality funds that are nice and safe. VOO, and PTY. We're buying good quality, well-known, reliable, monthly paying REITs in the form of royalty income. They are very safe, doing very well at the moment, a good solid long-term play. And we're buying Apple because, again, I'm still just a long-term believer in Apple. I could be wrong, anyone could always be wrong in the market, but I don't think I am. So Apple will just be a long-term play forever, ever and ever. The most interesting one today, I think that will be interesting to see who gets into it and whether they still firmly believe in it, is Tesla, because Tesla has absolutely fallen off a cliff, certainly in the last couple of months. Well, in the last month, so we were close to all-time highs at a month ago. So in the last month, we've pretty much just fallen down by, I don't know, nearly 30% in total, 25%. We've taken off the value of Tesla. So is it a buy at the moment? I'll leave that up to you. I'm not buying in at the moment. Maybe if it dips even further, you could tempt me to buy in to Tesla, but at the moment I'm staying clear of it. It'd be interesting to see what your thoughts are. It'd be interesting to see if you're getting into Tesla. So do let me know below. Pop in the comments whether you're getting into Tesla as well. It'd be great to hear from you. As always, I've got £203 left to spend. Let me know what I should be buying if something's dipped pretty seriously. That could be a good buy at the moment with good growth and pays a dividend. Let us know, rack your brain. Let me know about that as well, because that would be interesting to hear. So there we are, it's a mental thing. If you've got money in the market and you still truly believe in the stock, you need to be, and the company, you need to be keeping the money in there for the long term. Wait for them to do what they're gonna do. If you bought into a company because you were waiting for a catalyst and that catalyst hasn't come yet, just because there's a dip, don't sell out. Wait for that catalyst. Believe in what you believed in originally. We'll have these dips in the market. Jerome Powell will say something or won't say something, or someone will or won't say something that will have a dramatic effect on the market. Elon Musk will tweet something. I don't know, and it will have a dramatic effect on the market. Let's look at the basics. Let's take a step back and look at why you're investing in the company in the first place. Is it just for yield? Is it just for income? Is it because you truly believe in the company? Is it you believe in long-term growth, catalysts, anything like that? Is it cyclical value plays where you just think it's undervalued at the moment and it should be sitting here? Whatever it might be, believe in what you believed in the first place. As long as you do all the relevant research and you think that it's a good play for you and you're doing it for your reasons only. As I said in one of my last videos, there's no real right or wrong to investing. It's kind of a wrong way, but there's no right or wrong way to investing as long as you're getting into the market because of the reasons you want to be getting into the market, into the companies and the stocks that you want to be getting into for your own reasons. That's why I've done the ones I've done, which I explained. That's why you should be doing yours. So anyway, like, subscribe, comment, share, all the good stuff for the video. If you haven't already, it's greatly appreciated. And I'll catch you guys in the next video. See you later.